Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, I'm gonna show you the thing that makes a lot of people's entries get into drawdowns, massive drawdowns and losses, and I'm going to resolve those problems in this content. Okay. So the topic which I'll be discussing is supportive, resistive, pricing supremacy to becoming successful Forex trader. If this is your first time of coming to my YouTube channel, do your best to subscribe and turn on the bell notifications so that you get notified each time I upload a new content. Try to like and refer this channel to your network so that YouTube pushes to a high level of audience. Okay, so I'm gonna read down the documents and I'm gonna touch the chart so that you see the practical application of this topic. Drawdown is major reasons for losses in trading. This is when, look at what I mean here. This is when entry is at low potentials or non-energy state, and SL or stop loss is at non-zero state in the market. Measure the energy content of the entry price and SL price to ensure that drawdown will approach zero. This can actualize by mapping out resistance and support zones. Other analysis carried out. This actually emphasizes the entry optimization and profit consistency. So, what I'm trying to say in essence is all prices are subject to criticism. You have to criticize every price, and you are going to criticize every price based on energy content of the price, based on potential state of the price, based on the resistive and supportive strength of that price. Okay, and also the trend. That's why I say all the analysis carried out. Then you have to run your top-down analysis, you have to run your trend analysis, you have to run your plane analysis, structure analysis. Every other thing, you have to run your moving average or indicator analysis. You have to carry out the analysis in as much as you're obeying what this content or this topic is saying. Okay, so every price is subject to backtest, every price is subject to further analysis, every price is subject to criticism. You have to criticize each price to study the potential of that price, to study the profitability or the drawdown condition of that price. Any price entry that will lead to massive drawdown or that will lead to 50% of the stop loss size is not worthy to be traded. So the stop loss optimization, the entry optimization is the key factor in trading, because once you optimize the stop loss and your entry, the profit will just come naturally. Okay, because if you place a trade and it hits your stop loss, it means that the market have injected or have sent an input signal in your psychology or your thinking processes, creating a mathematical function that always make you to trade against the market. And so I'm going to solve this problem, and we start by going to the market chart immediately. We shall start with the volatility of synthetic market, and then we go to Forex market, and this is pretty much volatility 75 index. Let me just run some top-down analysis to tell you what I mean. In the monthly time frame, this market is actually a selling market. It's a bear market. It break this level, it pretty much break this level and pull up like it retests and then gain a strong resistance at this level, and so it is selling. It is in the month, it's selling in the month. So it is a bear market in the month, and in the week it is currently both bear and bull market, meaning it is ranging in the week because the market pulled down from this with a massive rejection. There was a high selling volume and there is also a high buying volume at the same, like after the sell volume increase, there is increase in buy volume. That means that the market is just ranging in the week but it's selling in the month, and so in the day the market is basically buying, trying to react to this strong resistance. Okay, this is a very strong resistance, and some reasoning can tell you that maybe it's breaking out, but the rejection shows that the sell volume is still higher than the buy volume, but it is actively buying at this point in time. And then in the H4 we confirm that there is a clear breakout from this trend line, and the H4 closed outside and the market is actually rejecting from this trend line, meaning that selling in this market is not going to work because it have left this sell plan. If you draw a parallel line to this one and then you have this, make sure you cross at least 2 points, and you see that the market have left this selling plan. But there is no guarantee that this market will actually have a high buying volume because there are always fake breakouts. It can re-enter and come back here. So if you measure the height of this plan, which must be a vertical distance of separation, we have over 6,000, close to 6,000 pip, and so if it can actually break out by 6,000 pip or midpoint of it, which is around 3,000 pip, and pull back, then we can say that the market is now on a buy state, like the market is now buying, right? So this is top-down analysis, social analysis, plan analysis, though I didn't do much of the plan analysis because this is not the topic I'm treating. So let's now go to the main thing about this topic, which is resistive and supportive price measurement. Resistive and supportive price measurement. So this is done in the entry time frame after you have run your top-down analysis. So we go to the entry time frame, basically 5 minutes or 15 minutes. So let us be in the 15 minutes. So we are having a sign that this market can buy, but because of the range state of the market, the breakout, the height of the breakout is far less than the source range, is less than the source range or midpoint of the source range height, and so we cannot take the buy. So we should be looking for a sell, right? Now, if you want to look for a sell, draw a line closer to the market price line, the current price line. When you draw it, you have to run resistive and supportive condition of this line. Okay, let's change the color to brown. You have to, let's change this again to blue. You have to run, yeah, you can use this blue is cool, right? So you have to run the resistive and supportive state of this price. Okay, now you draw a line including that price, like the price will become a point inside two lines. Now you see the price is now bounded inside two lines. Now study the characteristic and energy content of this line. You see that this line, these two lines, you cannot make sure you run your analysis as fast as possible before price will leave. Okay, so you can see that within the vicinity, price, like the selling, like this line, this zone is not able to create a sharp sell. Rather, it creates a weak sell because market oscillates and create reports about it before a sell happen, right? So that is the discrepancy or making the sell to be weak. So near this line, there is probability of having a breakout. Though most of those breakouts turn out to be a fake out, right? So the market, the price now have both resistive and supportive strength at the same time. So it have resistive and supportive strength at the same time because it creates a buy and also it creates a sell. But the energy content of the buy is lesser than the energy content of the sell because of the distance created by buy is far less than the distance created by sell, and the duration the market stays during selling period is bigger than the duration it stays during buying period about this resistive and supportive zone. Okay, now what we are going to deduce is that this zone have low energy content for buying. It have low energy content to buy. It also has low energy content to sell. The reason why is because the market break out of this channel, it break out of this upper trend line, so it have low energy content to do what? Sell. But it have a high potential to sell. So it is at a potential where it can sell. Potential is a measure of the current price with respect to where there are probabilities of localizing take profit. So if you see, you can localize your take profit here, localize it here, localize it here. Wherever the market creates counter signal, you can put your take profit there. But when you look at it, the distance is visible and big, okay, compared to other distances you must see in that vicinity. So because there is probability of localizing profit here, we have over 2,500 pip here, we have over 4,000 pip plus, you have close to 4,400 pip plus, compared to the one that is like when you compare it to other potentials. Like when you measure here, we have a potential, like you have to do this in completed cycles. Here we have a price that was here and then we have a potential here, you see, meaning that there is high potential for sell but there is low energy for sell. Low energy there means low dynamic energy or kinetic energy for the market to sell. So in this case, you can leave this market or you reduce risk, and the way you reduce risk, you are not going to sell, you will buy. Okay, so because we have given priority to the supportive strength, meaning that there are the supportive energy is now bigger than the resistive energy, we can buy this market but with reduced risk because of the discrepancies of the range, the source range. The breakout height is far less than the source range height or the midpoint of the source range height. So see how the analysis is going step by step and algorithmically, logically, and so that's what I mean by this supportive and resistive analysis. And so we can buy this market, and for we to buy this market, we also run another supportive and resistive analysis to see where we can place our SL and also the entry. So this is a support. The strength of this support is bigger than the strength of the resistance there. At the end, every zone can be treated as resistance or support, but the one that wins is the one you should follow. So if you measure the resistance of this zone, it have a low resistance because price break out of it and pull back and then create rejections. And then since a low resistance means a high support or a high supportive strength. Okay, so the best thing, if we can allow price to tap into this zone, we look for a buy. But if the market have already left this zone but the distance between the current price and this zone is minimal, we can still enter this trade and then the SL will pass like will not be within the zone but outside the zone, but in a counter direction. So you put it below, and so because where this SL is, no candlestick is there within this based on the zone, and so this is a zero energy because price is not going to tap into it. Even when there is liquidity sweep, then you can optimize it by looking for rejection zones and allowing price like the nearest rejection zone, which is this one, and allowing the SL to be outside those rejection. So meaning that you can put your SL here, so that the liquidity sweep is just trying to react to a rejection level. So it will just sweep and come here and tap, and then boom, upside, go to the upside. So that's cool. That is what I mean. Okay. And if you are watching this video as early as possible, you can just take the buy and give me feedback in the Telegram channel. We don't comment it in this channel, YouTube channel, because of scammers. So that's cool. Bye for now.